there. Welcome to Grow Billionaire. So this is RP here recording video on 5th of June 2022. So we are going to try to understand what is going to happen in Nifty for next week from 6th to 10th June. So there are 5 sessions in next week. In last week also, we did the weekly analysis and moves are pretty in line what we expected. We expected an up move in the Nifty and same thing has happened. So we are going to understand what is indicator showing us, what is Elliott Wave shows us, and then what is option chain tells us. So we do weekly analysis and we do daily analysis as well. So you can visit our channel Pro Billionaire. Here you see Nifty weekly analysis playlist. Apart from that, there are all other videos. You can visit and watch them. We have learning videos as well on option chain, price action, etc. You can watch those all videos. Raghav is also creating videos related to pivots. So visit the channel and watch the videos if you haven't. Subscribe to the channel if you haven't already. So moving forward in this video, we are going to check what is the trend for the next week. So currently the indicator shows us the sideways trend, and on Friday you could see that there is a big red Marubozu formed on the Nifty. So it was giving a fall signal on the Friday itself, but I didn't went for short and didn't carry the position. So it clearly filled the gap and it shows the negative signals. So this could be, and this could be a start of the fall, but I wanted to have one more confirmation. I want to see one gap down, then I will have that confirmation of the fall. So there is one quote I have with I have searched one quote here. This guy is Georgery. He's saying that you need to let go of trying to catch every move and accept the fact that you are going to miss a lot of trades. Okay, so what does he mean is you should not take trades in all the moves. Okay, you need to wait patiently and you need to also accept that you are going to miss some trades. That's fine. So that's what the market is all about. The markets are forever. You should not trade every move. Otherwise, only brokers and government will benefit from your trades, and you may not benefit from that. And it will be an over trading habit. Knowing the fact that it is giving a signal of the fall, I still didn't carry the position because I was not exactly sure. So let's understand whether it is going to fall or not. First, let's try to understand with indicators what they are telling. So these are all moving averages, by the way. Pink line is 200 EMA. In our last video, we mentioned that it is going towards these moving averages. So this is 100 EMA, white line. Pink line is a 200 EMA. The yellow line is 48 EMA. So you can see that it has faced a resistance exactly near this moving averages, and it has started the drop. Last week we were here. Okay, we were on this candle. After this candle there are 5 sessions, right? So these 5 sessions have happened after that. So we mentioned from here we are going to this level. So exactly it has went there and then started the drop in this candle, and again this was acting as a resistance. As you can see, this trend line was acting as a resistance, and it was broken on Monday with gap up. So gaps usually break the whatever major resistance and supports are formed. We discussed all those stuff on the indicator, and that has come to the reality. Here you can even see that arrow indicator has turned parallel, which means that the market is in sideways. So this is how the indicators are looking right now. One bearish Marubozu is there, which is signaling it has faced the resistance and it could be going to fall on the downside. So if it breaks this 16,400 support, if it breaks this, the indicators will tell us that the market has turned fully bearish. So it will be going to fall on the downside. It might take out this particular area where it has faced support previously, somewhere near 15,750 to 730 levels. It has taken the support and then bounced back, right? We might break it. Once we break this 16,400, we might break this support. That's what I can assume from the indicators. So let's move forward and let's check based on Elliott Wave and all. So this is our view from past many days. So this was chart taken on May 18th. After that also we had a lot of moves, but this is our view with the Elliott Wave that Nifty is making a triple complex correction, WXY, XX, and it is going to break this 15,671 and drop towards 15,400 to 15,000 levels. So this is how we had a Elliott Wave analysis view. Apart from that, we did more detailed discussions on these moves in last video. You can watch them. In last video, we also mentioned that we are going to pull back. So this is the video from 29th May. On last Sunday, we discuss this chart. Here we mentioned that this is the major resistance somewhere near 16,750 to 850 levels. So there we should face the resistance and drop. So the top that Nifty has made is 16,794. Okay, so from there it has dropped. So this chart also was valid as per our last analysis, and Nifty has faced resistance on near this line, right? This purple line here, it has faced the resistance and started the drop. Okay, another thing I want to tell you. So here also we mentioned that Nifty would go towards 0.620 Fibonacci in the video. So you can watch the video bulls fight back bears. So even the link would be popping up on the card right now. You can watch that. So we said that it is going to face the resistance at 0.620 Fibonacci. So this is how the chart looks like. Okay, now the Z move will start on the downside. That's what we are assuming. But yeah, we will check different possibilities. Don't worry. We will not say upfront that it is going to crash. So what has happened in this particular area, we will check with the Elliott wave. So when you check with Elliott wave, one view can be A wave completed here, B wave completed here, and C wave is a ending diagonal pattern. Because of the wedge structure, we'll call it ending diagonal. And after ending diagonal, there comes a rapid move on the downside once it breaks this trend line. So here you can see that I have drawn 5 moves of wave C, 1, 2, 3, 4, 5. So C wave completed here. So 5 moves of C completed, and we should have started the drop. We can assume that. So here you can also notice MACD has made a divergence. We should be alert when the divergence forms on hourly chart. So here you can see parallel to this, you can see here it has made a new high, price has made a new high, and MACD has made a new low. It has given the crossover. So this is called as negative divergence, and we are going to drop on the downside. That's what they tell us. And exactly at 0.620 Fibonacci, it has closed, the price has closed. So this I was not sure, because at 16,574 it has 0.620 Fibonacci, and I am more doubtful when it consolidates near this. Okay, if next session it opens gap down and sustains that gap, and then we will see a drop on the downside. So we should see a gap down, and then it should sustain that gap. Then we can consider the drop has started. So that is one confirmation that we need to wait for. Another confirmation is break of 16,438, because this particular swing on the trend line, unless that is not broken, we cannot say a trend line is broken, right? So in next session, if it is going to fall, it is going to give clear indication in the next session. Don't worry, you have to just wait for some time. Keeping this as a stop loss, always keep a stop loss if this stop loss is taken while going down. So if it goes like this, if it comes up, you can short here and keep this as a stop loss. If this is broken, then analysis invalid, exit the trade. So that's simple. So if the stop loss is hit, then your analysis is invalid, you should exit that trade. So as I told you, based on this particular chart, we need one gap down and break of 16,438. Even you can consider 16,400, because that is the major support. So yeah, so next chart is alternative view. Again, we are talking about this particular move in the different form. So this is plan B, or this could be a corrective pattern. So here we are considering A, B, C completed as a W, then X completed, connecting wave as a any 3 correction. This was a zigzag correction, by the way. Again zigzag, then here complex, and then here Z wave. So here the problem is we do not have a clear idea of this particular move. Okay, so the patterns are not showing clear 3 waves or 5 waves moves. So this is another doubt that I have, which because of which I didn't carry any positions. So here you can see Nifty has filled the gap it has created. So gap filling is a sign of trend exhaustion. There is a negative divergence. That is another sign. It has broken this trend line. That is the third sign. So 3 signs are there which are suggesting it to be a bearish signal. So next session, if it opens gap down, we will be ready for the fall, and we are assuming the fall to go towards this 15,700 levels. It should break this low. So that's what the main idea is. Okay, one more thing we want to cover, that alternative wave is Nifty without giving a gap down opening. In case it opens gap up and goes like this and breaks this high, so then it will make a different structure. Then again, fifth wave could not be a complete. Let me zoom in. We can in that case consider this as wave 1 and 2 of fifth wave. Okay, it will probably make an ending diagonal pattern. Okay, wedge like structure like this. It will go up, break this high. Okay, make 3 here and then 4 here. Okay, it can even make impulse pattern. It should not be a wedge structure, and this can happen. Okay, so the C wave will take more time to complete. Okay, some more days to complete, 2-3 days more. It will spend time in this. So in case it opens gap up, what we have to do is we have to wait whether it breaks again this low or this high. Okay, so if it opens gap up somewhere here, we have to wait and let's see whether it breaks this high or this high. Okay, so if the first high is broken, then we can assume that 3 swings will be still there, right? So one swing completed here, second swing here, and the third swing will be completed here. After that, the fall will begin. So that is another case we need to watch for. So let's try to understand now what is going to happen on the option chain. On the option chain front, let's see biggest resistance. So on the call side, whatever open interests present, which has biggest number like this one at 17,000, this will act as a biggest resistance, and second biggest resistance is 16,800. For Nifty, it will be difficult to sustain above 16,800 and 17,000. Obviously, it will not go beyond this, but yeah, these are the two major resistances. On the support side, 16,300, this has the biggest number, and second biggest number is at 16,500. So currently the range seems to be 16,300 to 17,000. This may change a little bit. So whatever on the put side will act as a support. So this might change, the data might change on the Monday depending on the move. But right now the data is not that sufficient. One more thing you can notice here is all the strikes after 16,700, there was a call writing happened, means additional call writers have activated on all these strikes, meaning they are expecting the market to be remaining bearish and they are expecting the market fall. Here, surprisingly, we do not see call writing on 16,500. So it should have been written at least something. It should have been at least non-negative, because almost 200 plus points of fall was there from 16,794 to 16,574, right? So after that much fall, some call writing must have been happened on this strike. So this is telling me that it could be a range bound session in the next 2 to 3 days. So there may not be a gap down opening, but yeah, small range bound session can come and we may form an ending diagonal. So this data is indicating a consolidation on the option chain side. We do not have much things here, but there was also a put writing because of gap up opening and upside movement. There is a still good number of put writers on 16,700 to 18,000. So this indicates the smart money is still there supporting the index. So it's all depends on whether it opens gap up or a gap down and whether it sustains that gap or not. So not much conclusive data, just the range on the option chain is 16,500 to 17,500 now. If this range of 16,500 gets broken by bigger margin, let's say Nifty moves beyond 16,400, then we will jump to the next support and then we'll continue the drop towards 16,300, 16,000. That's how we can assume the option chain data, because this will become bigger than this. This number will change because in a multiple of 500s, usually the supports get formed. So with that, we are ending our day and ending our analysis. Hope you like the analysis. If you have any doubts, ask in the comments. Do subscribe if you haven't. Thank you. Bye-bye.